Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. Got a big day today. We got a lot of things going on in the market. I'm going to, as always, I'm going to try to go as fast as I can. I'm going to be reviewing the structured trades from the Trader Lab community in the stream and try to get to real time if we have enough time for that. Um, this stream is based on Bookmap OrderFlow tools and how it integrates with auction market theory using a volume profile in the intraday developing time frame. In addition, the profile is the way I see it is a chassis to overlay structured trades on. Volume profile is really a way to see inside participant behavior. I personally do not use indicators in this process, but so you understand, what if you define what an indicator is, it is really an output of participant behavior in some fashion or derivative. And most retail traders look to some kind of math-based outputs to determine trend or triggers or however they do it. And they do it in multiple time frames. My experience has been that that is an inconsistent process and leads to random outcomes. Random outcomes, of course, happen in trading, but we are in a random environment. If you have random inputs, you're always not going to be in a situation to measure or know if you actually have an edge or just a random outcome in a random environment. Now, by random, I'm saying not measurable with no statistical edge. We all see optically, we see things and our brain sees patterns. And then what we want to do, of course, and our nature is to try to avoid risk and create processes where we can predict what's going to happen. The prediction is a risk aversion, psychological need to fulfill as to build certainty where it doesn't exist. So if we can change this the perception of this a bit, maybe we can change it to the idea there is no certainty. And like a casino, who operates in a condition of uncertainty, but only plays games that have structured or anchored inputs, we can then find if we actually have something that gives us an edge over a large sample size, not the random outcomes. You can flip a coin and have a winning trade, but does that create sustainability and an edge over a random distribution of outcomes in an uncertain environment? That's the question. The answer is what we work on and explore in the Trader Lab. And you're all welcome to visit the Trader Lab community. There is no cost. And what you're going to be seeing in the stream, the same thing I do all the time, is structured trades. And I'm going to start with the RTH Open, but there's a couple pieces I have to show you. Grab a pen and a piece of paper. You know, I think I just missed the one little piece I need to do here. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. If we went into it, we'll observe it. And again, these are not trade recommendations. I have to show you the ETH part of it, and I also have to turn down these alerts I'm getting. Hold on, I gotta make an adjustment here to get these little lines off the chart, and then we will be good to go. Okay, and by the way, if you're into YouTube, welcome to the stream. This is the Trader Lab community, and thanks for visiting. Big day again today. And let's follow the yellow brick road. And if you're visiting in YouTube, please give a thumb up. It helps the stream. Okay, now let's go back. Let's look at levels, guys. Yesterday's low, price gap. Where are we here? Yes, this level was what's called the naked volume point of control. And wait, there's one more. I got to show you something. Just so interesting. My ears just got blown out. What's going on here? Whoop. I have some alerts that are set in here. So apparently we are crossing some levels. Let me try to find this if I can. Guys, where's the overnight high? I can't see it. In a Trader Lab, can you? Yeah, good morning, Stephen. Can you guys post that in the Bookmap Discord Trader Lab community? Overnight high. Anybody? 54.73 quarter. Is that right? One more. Thank you. 73 quarter. Wow, it's so far away. I wonder I couldn't find it. Oh, yeah, here it is. Okay. 54.73 quarter. And this was off the report, the NFP. Basically, this is the highest volume from yesterday. It was a target, 54.67. We got to like 70. This was important. This is the ETH high, and we rejected it. What the market says, that's too high. So we got into yesterday's low, and then we rejected the whole enchilada. So that sets up, thanks for playing, and we'll see you next time we're back here, whenever that might be, and then the trend continues. So now I'm going to take you into the RTH Open, and so that was, and today, when I was coming in, my plan, now all these levels are on the chart before, also, and they were targets, and this was before the report, so all this stuff goes on here. These were targets coming down. 27.5 was a target. And if you open below these things, and here's the RTH Open, it sets up targets coming the other way. So possibly back here, back to the overnight mid, and the naked volume point of control, 19. And 19 was yesterday's, I think it was yesterday. No, it was an open naked volume point of control below us that was left the last time we were down here. So this is an important level. I already tagged my level up above. Remember, let's look at how the auction works. Ooh, this, same thing. We tagged it in the ETH off the report, okay? And the market did the Acapulco cliff dive after that. Once this is too high, now we're going to look at what else might be too high. This, and there's another one. Got to find these things. This becomes a target. This is the ETH volume point of control. What volume points of control are in the auction world is high volume. And I always think of auction like shopping. So it's kind of simple, really. Now, what the market does and the random rotations and the rest of it, that's what makes it difficult because of that randomness. But putting that aside, we have to look at a higher, kind of the broad stroke in order to get down the micro stroke. This is now too high. We open below it. So the possibility is come here, come here, come here. I mean, whatever, right? But under these conditions, not so much. So this is too high. Also, in the ETH, which is, the last auction, this was a high volume area in the distribution over here. This is the ETH over here, so you can see it. So we went up, we rejected what was above us. Now we do one of these things, a rotation and consolidation in the ETH. The highest volume in this distribution was there. So think of this like, oh, I'm not paying that. Yeah, but it's on sale. And it kind of rotates. This is what a consolidation looks like. The high volume in any consolidation in any time frame or micro structure, and you'll see me go down into with the scalpel. It's all generic. It's all shopping. It's all rotation. It's all consolidation. And this is how the auction works. The market is continually trying to figure out, is this too high or too low? Well, I'm not paying that. Yeah, but it's on sale. No. Yeah, but it's a great price. I'm leaving the store. You guys can keep it. Now we start down here. So it's a sequence of rotations. So the market does these rotational behaviors and either moves away or it finds too low and then comes back and checks or checks. And so this is the nature of auction. So in the ETH, the most recent auction was too high. This was left over from last time we were down here. If I open lower, follow the yellow brick road, and I check the last place it was too high in the ETH, and the last place it was too high in the previous RTH, I can sell it. Or, here it gets more fun, or I can look for the shorts, take a short first, turn around, cover my short, put another short back on, or, and see, there's a lot of ors, or get long in here. Now, I'm going to tell you, for me, no longs today. And it doesn't matter if the thing goes up to, wherever, at least currently. And I don't see the current market, but I'm going to show you the first trades. So statistically, this is a high probability. Boy, we got so much volatility in here. This has a high probability. I'm just letting you know. And these are all based on statistics. This has a high probability. And we got this sitting down in the book. And it's 2,000, almost 3,000 orders sitting down here. So I'm looking at this. This is, right at the open. I have my levels. I know about this. I know about this. And I'm opening right here. So I'm going, okay, right? Too high? Maybe. Maybe too low, but it's a high probability target. And considering the gap, the trend, and everybody is running for the exit, I don't know about you. I want to get short. Just me. And again, so how might I do this? Well, if I decide that I want to trade with the trend instead of counter trend, I will use long trades. And this is not, I'm talking about what I do, not what you should do, because you can craft this any way you want. You could go long, short, you can do whatever you want to do. I'm just, call me a little crazy. I just want to stay with the trend. Old saying, trend is your friend. Trend down. So for me, when I see longs, I use them to cover. I don't use them to get long. Because I want to do is, if I see a counter trend rotation, I want to use that for alignment. So there's two sides in the market. And if the market gets lopsided, it can definitely squeeze out the last leg. And you got to think of it that way and then continue if you want to be on the short side. Today, for me, it was shorts. So I did not have a long trade today. Doesn't mean I won't, but at the moment, up to the start of the stream. So let's look at this. I'm going to take you into the microstructure. Now, what is this? Let's come, whoops. Went too far here. I got to show you levels. Okay. I think. All right, let's just start here. RTH open. So what do we anticipate? In the Trader Lab, I always say this, and I always say it at the top of the stream, and I know you guys yawn and hit your head on the desk. I say the market goes up to go down, and the market goes down to go up. And the reason for that is, and if the market's short, what can we anticipate after yesterday? Potentially two things. One, the market opens, we get a counter rotation, or we don't. So it's like we can get early selling, then profit taking. So the market goes down, the market goes up, and then the market goes down. Now it could also open, go up, and go down. So we're looking, for me, I'm just looking to see who takes control. And I suspect whoever the initial participants are will get taken out. So there's two possibilities. New sellers, right? So that gives you your downswing. Then those sellers, if we run out of those early sellers, they become buyers, their buy stops, we counter rotate, and then we have to see. And that's where these levels come in. So RTH open. Now I'm going to take you into microstructure. Follow the yellow brick road. That's what I call it. This is called developing volume point of control. What do I see? My sellers. Are we shocked? Not really. I'm going to label this variable high volume node. It's actually right here. And what is a variable high volume node? It's my attempt to follow pricing in the auction. Because remember what the auction is. And what is the market? It is participants trying to find out what's a fair price. If you are a shopper, which is what traders really are, we're shoppers. You know, the old saying, buy low, sell high, buy low, right? Well, that's what we're trying to do. What's too high, what's too low? In all these interactions and all fractals and time frames, there are shoppers, and they represent themselves with consolidations, and this is happening in all time frames. So when the market opens, this yellow line is measuring volume, and RTH open, it starts at 0. So now it's counting the volume, it's measuring the volume, and it's very sensitive on the open. So this thing's going to really run around, but it gives us, and this is very aggressive trading, and I always say developing traders should not trade this. What they should do is learn to read it. This is the language of the market, and since I don't use indicators, what's my indicator? It's the participant behavior. Your indicators are translators. That's the only difference. I'm in real time, you're using lagging, and if you're actually using multiple inputs, you're going to have ambiguity, conflict, and maybe even inconsistency. And again, I can't speak for you, but typically results speak for themselves. And if you're trying to always fix it and tune it and tweak it, that's just, you're trying to optimize a process that then maybe does not have an edge. And that's up to you to determine. That's what Trader Lab is about. So this is the retail price, chop, 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 consolidation. What happens if you break away from a consolidation? What it says in the language of the market, and I speak market, so this is a foreign language to you. That's why you use Google indicator translator. Same thing. There's my sellers. What does this tell me? Too high. I mark it and I break. Now, VPOC migration, too high. Now I'm down here. There's more volume here than up here. VPOC migration. You'll see the little consolidations here. What these are reflecting the volume. They're actually distributions or consolidations. So when I break away from them, it's in the short micro time frame. I'm not paying that. How about down here? Not paying that either. You can have it. You want an S&P there? You buy it. I don't want it. That's what they're saying. So okay. We don't want that S&P, do we? Well, maybe we do. But do we want to sell it down here, or do we want to wait? So there's a couple possibilities. So I'm going to show you a couple ways to do this. This is a structured trade in the Trader Lab. I see absorption here, and this, I call this VPOC migration. It is a structured trade, and it's extremely aggressive. So right here, I see my seller. This is too high. I now have more volume here. The volume point of control shifts down. It shifts down. These are potential shorts. Now, where am I trying to go? You ask. Here. Because this, in the ETH, is the retail price. I already checked the retail price above at the high, the overnight high in the ETH. My next level is this. Now, how it gets there, does it get there? It's called clueless. How about that? So I take a short here actually. And these are trades I take, and I take others, but I'm going to try to keep this just, structured trade. So you can kind of see process. Now, so here, right here, I get scaled, and I get taken out here, right here. Now, that's okay. Now, where am I? I come back here. Now, remember what I said at the top of the stream. Market goes down to go up. And the thing about this is, there's no way to know if we're going to get here before the rotation. Now, I did see this. This is absorption. So I'm seeing this, and my antenna goes up. I go, but now I'm seeing the sellers. Now, let's look at the order flow. So I've got a buyer here. Sellers are all up here. I have the sellers here. I get a buyer here. This is moving down. This is good for me. Right here, nothing going on. I get my buyer here. As long as I'm above below that buyer and this volume point of control, I'm okay. I see the buyer here, the teeth chatter a little bit. I'm also below this guy, that buyer. Everything is looking good. I get my seller here. I'm already going, hey, I'm all right now. And I get this reversal. As soon as I get this reversal right here, the trade has problems. Because now these guys were absorbed, and I can't tell what's going on until, I see it. Because where would your indicator tell you it's time to get out of the trade? Well, my quote indicator tells me I got a problem in here. So then it's trade management. So what I do is my job is to get risk neutral. Job number one. This is Trader Lab. It's a process. And then if I come back above here, which was the first place it was too high, then I'm out of the trade and I'm back here. So this is the squeeze. Market goes up to go down or goes down to go up. Which one? No way to know. So now what do? I come back here. I pop the opening swing high, which is right here. I get my buyers. Now, I'm not seeing a lot of action here. There's only a few buy stops going out. Let's watch. What is this? Right here, VHVN. So I take the stops, including moi. I come back here. This is now retail. I pull back. Let's look at the microstructure. Now, and I have to suggest, you may look at this and go, what the heck is going on? I understand. This is a language. Now, if you want to learn to speak a foreign language, think about it. If you've ever tried to play a musical instrument or speak a language, you're going to go, what's going on? That's what I do. I go, what's going on? So right here, I come up to the stops, which I know are there because it's the opening swing. And I also know, including me, that if I get the counter rotation, they'll take me out. I'm perfectly okay with that because the market never has to come back. So I get my rotation, I get my stops, and I'm looking. Now, I need a trigger. And I don't know right here what's going on. I mean, I'm clueless. I'm proud to tell you, clueless is my nature because clueless doesn't mean ignorant. It means open-minded. By the way, if you have questions, please post them. Now, right here, I see a micro consolidation. You can see it there. Okay. And I have no clue. I mean, I see this for all I know, it's going here, and now it comes here. So I get my reversal. Now let's look here. Look at the alignment. I'm going to put a little line on here just so you could see it. So there's my high volume, and that's micro high volume. I cannot do anything with that. But I know it's there. So what I can do with this is go, the participants in this microstructure, and it's only in hindsight. I don't think I know anything. This is now too high. This little area right under it, right? That line, not the line, but where this finger thing is, right there, top of the arrow, it's called a low volume node. It is a micro consolidation. When I see it, it tells me too high. Now I can't, it's only in hindsight. Don't forget. Now I have this is too high. This one, this is the same thing. So micro consolidation. Now next one here. So resistance. So now I have too high. I have too high. And I have, this is my retail trade. This is called mean reversion. Now I need to get short somehow. There it is. I take the short. I'm coming back here. This is just mean. Now we're in something called mean reversion. This is a context that we explore and you would understand if you're in Trader Lab. So that's the short. Now, where am I going? Here. This is the same trade from here. What happened? Slapped in the slapateria. Why? Opening swing. No surprise. Are you prepared for it? Yes, if you're in Trader Lab. Once you pull outside, now this is the retail price. What is mean reversion? Outside in trading. Context inside a context. Trend down. We hit our upside target. I'm bringing you back to Y. Squeezeteria. Rotate. Trigger. Alignment. Microstructure. Short. No bueno. Who knows? Variable high volume node. All we did was pick the stops, break below it, come back and test it. Short, south, target. Now, follow. Where do we come? Watch. What's too high? This and this. Let me just make sure I got the right level. So you got this, which we broke out of. We have this, and we have this. So these are levels. So here's what I know. Too high, too high, too high, break low, potentially too high, mid and VWAP, too high. That's what I know. Too high. By the way, if you get taken out here, if you did, what do you do here? Break. What's this? Watch. Too high, too high. Where are you going? Here. Now, the thing with this is, it is time frame and fractal specific. There are some traders that are going to sell this. Let me get back here. I should say, let me just get my bearing straight here. Yeah, get short here, get scaled, keep their stop up here. Other traders are going to get scaled, keep their stop up here. Other traders are going to put their stop here, but where is it? Mid and VWAP. Are you going to put your stop at the mid and VWAP? I don't. Why? Everybody else does. Where does this trade fail? Here. What do you do now? Break low. What do you do here? Add. What do you do here? Scale. Break below. What do you do here? Add. You scale. I did. Get taken out. No problem. Annoyance. Yes. No problem. Where's my variable high volume node? It's there. Now, this might be too much, right? Let's watch. Where do we come? Where's resistance? Here and here. Now, come across, squeeze out the shorts. Life in the fast lane. Is the trend up or down, you ask? And I'm going to say, I think it's down. So let's watch. Now, we come up here. We're over all of this. Now, the question becomes, are we in an uptrend or a downtrend? Right? How are we doing in YouTube, by the way? You guys conscious? Or did you pass out? I wouldn't blame you if you passed out. Today will pump a lot of dopamine and adrenaline, and you're going to be very tired if you've been actively trading. I get very active on days like this, and I can get a little frisky. So I have to kind of keep, a leash on my psychology, my emotional states. One of the things you don't understand, well, I'm sure you guys have heard about this, but when you're active like this, there's adrenaline and a lot of dopamine. You start getting, winning trades, and your account is looking good. You can forget. You lose track or insight. So here I'm watching the trade go up. I'm out of my shorts. I do not get long. I am looking again for a short. So let's come back and remember what was too high here and here. Remember 19. You do remember, right? That's why levels are important, and this is the auction. Now, there's no precision. It's areas of behavior. So, I know we all would love to have precision, and our nature is looking for certainty. Unfortunately, it doesn't exist in the market. What exists is maybe, and then you try to get in alignment. As long as I'm under this, I only want to fade it, but I don't know, where are we going to come? Here. Well, I see this. I'm going, well, there's nothing to do here. So up, 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 up. Now, going up. Right here, I see a buyer and I see a seller. So, ain't a sweep. Stop sweep. We got a lot of stuff happening right here. This is my location. So I'm looking for this. This is what I'm looking for. I'm saying test. And this is when you start saying, come on. I'm actually cheering for the long so I can get short. So let's look. Microstructure is there. Now remember how this works. I have no clue. Proud to say I'm clueless. Because if I thought I knew something, I would then think I have a foresight, and I don't. Here's what I see. I see this. I see the microstructure. Now, at the time, here, let's come back to this. At the time, this doesn't exist. So right here, I see microstructure. So I'm watching this thing, you know. I see this. I come up. I see microstructure. I've got it there, and I've got it here now. So this is a suspect. It's nothing more. Now I break below this, putting another line on here, again, just to show you structure. And I know I take a lot of time with this, but I think it's kind of important. Test, break low. So now I have this, and then the buyers up here. These guys were absorbed, and up here, there are buyers here. They got absorbed. So you see the buyer, but you see the red delta. If we don't go through it, in other words, the buyers overwhelm the seller, then these guys have control. The buyers take, and this is like a shootout. I think of it kind of like trench warfare, you know? It's like they're shooting each other here. Who's going to win? Do the buyers overtake the sellers here? You see? If they don't, and I break away again, this is suggesting to me that potentially this is too high right here. So, and this is the fight, you see? This is the test. This is a short. That's a Trader Lab structured trade. What that is a trigger, and you could learn this in Trader Lab. And remember, the Trader Lab it's a no-cost community. We pull back here. It's the same trade. So you get this chop, your consolidation. You get a trigger. Now, this is the trigger. Now right here, it's a suspect. And subject to your skill, you could be short in here. Your stop has to go above here. Or you're waiting because you get your test. And now you're see the consolidation? We break out here. So now you have a bona fide trigger. The micro high volume here, and remember you got the midget up here, so you also have it there. You actually know it was too high here, so your stop goes out above that structure. This is your entry. Your stop is up above up above this high. Is that, and you would, what I often do is I'll put a limit order, because the lunatic that resides in my head, I call him Hyde, will get in here. I don't want to miss it, FOMO. Well, the discipline part of my trading, and even though I'm going on 45 years of trading, it has nothing to do with it. The emotional triggers are always there. You just have to recognize them and find a way to manage them. And that's putting yourself in a calm state and anticipating them, not being surprised, because that's really what will undo this in the business. I believe you come to Trader Lab, you'll learn how to trade if you put the work in. Whether or not you can do it has to do with learning to develop confidence in your statistics. Without statistics, your emotions are really the driver. When you have statistics, you can manage your emotions better because you have something tangible versus how you feel, which is triggered by fear and greed. So that's the entry. That's the short. And where's the target? It's here. Mean reversion. You see this? What was the trade we did before? Wasn't it mean reversion? What is this? Trend down? Location? Ballpark? Short? Trigger here? Another opportunity there. Scale here. Put your helmet on. Where do we pull back? Variable high volume node. Have you seen this before? Look at the structure. Can this help you in your trading? And I can't see your questions at the moment. And unfortunately, I'm taking a long time here. And but I think if you can see how this works, I can get these out of here because they're stale. Let me just get rid of this. Get rid of this. Whoa, I don't want that. All right, enough of that. Okay, short continuation back there. So here's what you have. Short to there. Short to there. Same trade. Different structures. These are specific setups or structured trades. It's available to everybody in the Bookmap Discord Trader Lab community. There's no cost. Pull back here. What is this? Structured trade. Short. Acapulco cliff dive. Remember where we were going. Overnight volume point of control. Overnight low. Next target. So those are the shorts. And there's more, of course. Now this, so you'd have all of these in TraderLab. This is a target right here, by the way, next target. So you have, this is a target coming down. You remember that from the top of the stream. This is your next target. So what I do is I just trade the targets really and manage my trade, you know. So I get to my target. This trade would be over for me. And it's, or let me just put it this way, subject to the number of contracts. So let's assume I'm only running 2 lots and then I'm adding and scaling, or I'm just running whatever, you know, it's all subject to the plan you vet. Here's what I see. I break here. It's now 9:15 at 9 a.m. If we make a new low, and I can't imagine any reason why we would take out the high of the day at the moment. Now, are we going to do it? It's not my job. Here's what I know. Let's go back to what we know. I know this is too high. As long as I'm under here and I'm under here, I'm only leaning, for me, on the shorts. And it doesn't mean I can't get long. What it means is I'm on the shorts up to this so far. Okay. Now, it doesn't mean you can't trade both sides. It doesn't mean anything because it's your plan. It's not mine. But let's look at what happens. VPOC migration. This was my target. Now, there's another piece, the initial balance low. At 9:30, the first hour high or low, and it's called the initial balance, or IB. There's over a 90% probability, past performance not indicative of future results, we're going to take one of these things out. I don't know about you. I'm going to lean on this one, the low, all things considered. So here's what I know. Target, here, out. Now this. Now when this happens, I'm going, oh, I shouldn't have got out. Isn't that what you think? What is that? FOMO. Greed. Emotional stimulus. But I don't have a structured trade now. I'm thinking I shouldn't have got out. I'm feeling I shouldn't have got out. You know, you should have trailed your stop here. Because that's, if I was using a trailing process, which I do discuss in TraderLab, I'd be using these sellers and the fact that these buyers got stuffed. There was right here. Notice the test. This is micro. Now, I'm not going to go into that here. This is trade management. It's another process. It's advanced. Notice where I come back. Liquidity comes in the book. I'm going, I should have stayed, but I got out. So now, what do I do? What do I do, you ask? Watch what I do. So I come across here. Now, I'm in something called mean reversion, right? Let's watch. I'm going to show you another way to trade this. Now, again, what I do is not necessarily the best thing to do. It's just something to do. So I'm looking now. So I come in at 9:30. I'm looking for my IB. It's not set yet. So I'm looking up for rotations to get short. I see this in the book at 60, and I think I posted this in TraderLab to watch 60. I did, actually. You come to TraderLab, all this stuff's going on. So I post. I don't call trades because I take stops too. You know, you don't need me. What you need is, I believe, is to understand how the market works. Then you can formulate a process that's in alignment with your psychology. So I know this is here. This is how OrderFlow can help you. This is resting liquidity, and there's like 800 contracts sitting here in the limit order book. This is important. This is how you use a high-tier tool like Bookmap. I'm putting pieces together. Now, we know that they can pull, they can do anything they want to do. And everybody on the planet can see it. So I know that also. But if we know something is sitting there, 800, and I'm looking to get short because at 9:30, I know the low of the day, the current low, will have, wherever that is, it at 9:30, has over a 90% probability of getting taken out. What do I want to do? Get short. So I'm anticipating a statistic, and this is TraderLab. So I know about this. So I know this is still important, but not as important because I already came under it. And now I have the current market statistic. Don't forget, this was open. So it was just hanging out here from the last time we were down here. Now I'm trading the current auction, but not forgetting what's going on. So right here, let's look at the structure. I think I posted, I don't remember. I think I posted this in TraderLab. I took this short. Now, I have a little experience at this, so I can read it probably better than most, you know. I'm not saying anything, you know, I mean, it's random, right? So if we look at this structure here, so there's a buyer. So here's what I got. Let's come here. Microstructure. Well, first of all, I got buyers here. I got this structure here. I see a seller. No bueno. Buyers take control. This guy is under the bus. Thanks for playing. Now I see buyer, 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 buyer. I'm not doing anything. Are you? No. I get this. Where's my seller? I know my sellers are stuffed over here. I see my buyer. This guy is under the bus. As long as I'm above him, it's going up. Buyer, buyer, buyer. Liquidity. Look. Now, here. Selling iceberg. 8 stops. Only 8 stops. 1. This is the only thing I use from Indicator World. Divergence. So this is the stop and iceberg detector. It's available in Global Plus. It's an add-on. You can read about it in the Bookmap Marketplace. These orders are what's called MBO data. It comes directly from the CME. You know, orders have to be tagged. You know, what is this? A market order, a limit, a stop? What the heck is going on? Well, if it's a stop, they have to be labeled. So basically, Bookmap reads these order tags and then lets us know, is it an iceberg order? What's going on? Delta represents in these bubbles, the aggressors. So a buy stop is an aggressor. It becomes a market order. That's delta. And buyers, right? So we know that. So just because there's buyers here, I see there's only 7 stops. So that means there's initiators in here. I get 1 stop. There's initiators in here. I get 8 stops. Where's my delta? I get 1. Where's my delta? There's my seller. There's my seller. The antenna is now in the alert mode right here. I see my seller. Right here, I see no buyers. If you put a little box around this, you have a consolidation. It's right here. Buyer, exhaustion, liquidity, sellers, no buyer, break. This is a short. If you can get on it, let's watch it. I took this, so I can't even remember how I got into it. I think what I did here, I read it at this point, so I kind of, but so this is support. You see this? This is the last area of support. Buyers are above it. I get my sellers here. I break. I was looking at this because there's high volume there. You can see the little node, and there's high volume here. So what I'm looking at is these structures. So the buyers are in control in this structure. You can see it. So that's support. Sellers take control in this structure. There's the break. I don't know until I can't get through here. Now, once I break under this one, which is also now support becomes resistance. So I took a short here. So that's still within my, you know, it's only a couple point risk, and I got this. So that was my short. I got scaled. And I'm going for the, what's called the IP low, which is going to be this at 9:30. And I'm thinking, now I don't know how it's going to get there. If it's going to get there, I know nothing because I do know nothing. So I'm looking for this to get taken out. Microstructure right here. watch this. You see this symmetry? Let's just watch it. This is fractal. So what I do is I look at the fractals. Well, I see the absorption here. 930, this is going to be locked in, and I'm going to be I'm trading towards it. So I cover. Now this is just what I do. Now I'm still going to be trading outside in. Let's watch. What was too high? Wasn't it there? Wasn't it there? I put another short on here. So I'm using these structures when I come back. So I got covered, grunting. This was already here. You saw me put it on. This shifts down. VPOC migration is what I call this. This is saying for the whole day, this is the retail price. If I pull outside, it sets up the same context called mean reversion. So now I'm going to trade outside to here, going for 930, which is now locked in, this low, the IB, and that's my target from here. Let's see what it does. There's my target, okay? Now, so that's another short in TraderLab if it's in your plan. So now this. Now I have another trade in TraderLab. I hope I can catch up real soon. And it's called the IB continuation trade. Let me show it to you. And I hope you guys are getting something out of this. Now, I'm below this, right? So I'm looking at this. So that's important. And I came under here. So that's important. So that's why it's a target, and then it's trade management. You know, whatever it does, it does. And I never know. Like everybody else, I'm clueless. So what I have to do, I mean, I have levels, but I can look here and go, I have sellers here. If I come back and test it right there, that subject to your time frame is a short or a trade management process. If this is too high and I break away from it and I come back and check it, it's still too high. You see how this might work? I see my buyers absorb here and I have a stop sweep. Antenna is up. I'm just saying. Now I come back here, right here. This sets up a structured trade in the TraderLab called the IB continuation trade. I'm going to show it to you. I took this one. And I trade, you know, I just do my thing. I don't know what's going on. So here is too high. I come here. I have the absorption. This suggests a counter rotation and a sweep. I have a structured trade against this. It's called the IB continuation trade. I also, at the same time, let me bring you back here, because this is what it looks like. Where's my volume? I'm going to put a little line. I'm just going to show you how things might align. And this is not anything more than trying to keep alignment with the trade. I get my break. I get my pullback. I have my high volume here in this volume. And you can see it there. So I have alignment. So what I'm doing is I come back to alignment. I know my sellers were here. I know this at the moment is too high, break low, pull back. It's a short, which I take. I get a scale, comes back, I get taken out. Okay? Now, what do I do now? Well, never mind what I'm saying. I just go, okay, do I want to get long or do I want to get short? Well, I have to look. I pull back here. Now, right here, I'm thinking all I did was get squeezed out and I want to get short again for this. What do? I see the rotation and I'm looking for the short. I'm not getting under the IB. Now, we have another trade in TraderLab, and this is not a trade I take because it's counter trend, but it's perfectly okay if it's in your plan. You know, it's just a trade. You know, what's this? And it's called the IBF. It's the IB failure. Now, I'm going to specifically state for my plan, there's two ways that, you know, in trading, of course, you can do anything you want. This is also a structured trade. It's not a get long trade. It is either a get out of Dodge trade and don't take any shorts, or it's a long, subject to your plan. And I want to stress your plan. My plan is not your plan, but it's a long. So if I perceive the trend is down and I only want shorts per my plan, given the context, and context is number one for me, I am not going to take the long. The long though is from here to there. That's a structured trade. So if I know I've got a long, I do not take shorts. I'm out of my short and I'm looking to now get short again and take advantage of this long. I know it might sound contradictory, but let's look. So I come here. Let's look at this. So what do I see? I see my buyers going to the moon, Alice, right? What do I have here? This is the retail price for the day so far. I'm above here, and I have a couple possibilities. I can keep going naturally. I can come here. If it's currently too high, the shoppers are going to go, nah, I don't want to pay that, and we're going to come back here. So the short is from here to here, and then a runner, or you're done from here to here. Let's watch the trade. So I took this short, and I took a stop on it, okay? Now I have another location here. Watch. I took a short again to here. Same trade, just different location. So I took it from here, going for here. I got taken out. And I got to tell you, it is what it is. This pulls. So this I looked at this, I said, that's interesting. But I come up and I go sideways. As soon as I go now I'm going sideways here. I see my seller. Where's my trigger? Don't have one. I see a buyer here. I'm above this guy. So this is still going up. I see a buyer here. I see nothing over here. I see a seller. I have a buyer. So these sellers were absorbed, and right now the buyers are still driving the bus. I see the buyers here. I have 111 stops here. I only got 2 here. Remember, stop divergence. So antenna goes up again. I'm looking at this. I got my buyers. I got my seller. My buyers are in control. I got nothing going on here. Buyers are here. I'm looking for continuation, and my next trade is a short back to here, wherever it happens, and then again back to here, same trade if it comes. There's my sellers. Okay, this is my trigger. I'm now below these buyers. There's my trigger, and you notice it's in alignment with this. So I get my seller, I get my pullback. This sets up a short for me. I take a short, my stop is here, and my target is here. So what I do is I scale, get risk neutral, keep my stop up here, and I'm going for this. You see, what happened here was it's the same trade. It's just, c'est la guerre. I'm going from here to here. Didn't work. Okay, now I'm going from here to here and to here. That one works. What's the difference? How about this? Randomness. Now I'm managing the short. Let's talk about that. And I'll come up for oxygen. Micro high volume structure absorption. Under here, and the idea is to stay. Now there's another trade that sets up here, by the way. It's that same trade that I took before. It's called the IB continuation trade. If I pull back in here, I can add and manage the trade. So let's look. Here, there's a line there already, remember? Let's see what it does. This is a short. IB continuation trade, structure trade. Now, and I believe I narrated this in the Trader Lab. I did. I said there's absorption here. So I'm seeing this, and this is, I think, the last trades I was on. And I was narrating this. I said there's absorption. So right here, you can see absorption also, and there was a buyer. But that's set up as short. You see the IB, this is structured trade, IB continuation. So, and then to wherever, and that's the joy, and that's the unknown. But look what we see here, 1,000 icebergs going off. They are absorbing the sellers here. So I posted this in Trader Lab, absorption, like keep an eye on that thing. What happens here? Absorption again. So I'm seeing absorption, absorption. What that is telling us is these guys are being absorbed. So there's sellers here and there's volume here. But look at this iceberg. Again, this really helps. I have my absorption detector and I see who's absorbing. I buy icebergs. And we don't really know, are they covering shorts? But either way, that's big volume that they're showing us. There's my buyers above. I come back and test, and I posted this. Be aware. I don't know what'll happen. Look at the change in behavior. Here, I come back again. Sellers are still hitting it. Where's my level? It's here. So they got to clear this and keep going. See? And this is where it's over. So the short's over, and that's as far as I got. So that's all. That's it for me. Oh, look for this. Where do we pull back? So this is another IB continuation trade. I didn't notice this because I wasn't looking at it. But you see where it comes? So if you were short, we know there was absorption here. We break out, take these stops. Right here, you have, right here, these are structured trades. You see the location? It's there. So that's a short in Trader Lab. You'd get risk neutral. This is the trade fails above here. There's another short here, chop, 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 break low, trigger, another short. So these are all shorts, but you have to be aware of the absorption. So, and there's absorption here also. So these are tradable, if it's in your plan. So short, short. So that's it. Now, once this is too low and you're seeing the buyers again, now where's support? It is this micro high volume, right? Going to just throw it on here. There. You see where the volume is? So if you get short here, this is your obstacle. If you get short here, obstacle. If you get short here, obstacle. If you get short here, obstacle. You get short here, obstacle. You got short here, you take a stop. That's the way it is. I haven't seen any of this, so let's see what's going on. I'm going to jump to real time. Maybe we can do that. You have questions, I'm going to come up for oxygen. How we doing in YouTube? Hope you're getting something out of this. Please give a thumb up in YouTube if you're finding this useful, interesting. Give me a little encouragement to continue doing the stream. I do not trade while the stream is on, which means, I miss out on my primary business. So that creates always a challenge for me. So I just need to know that this is something that Bookmap should continue. So that's important. So I need you guys to come to YouTube. I need you to participate because it's only worthwhile if it's making you understand the market better and giving you tools and skills. That's the only reason I do this. Notice here, buyers were here. They are absorbed by the sellers. This is important. Now, I haven't seen everything else. I got to get my brain hooked up here. Hold on a second, guys. I got to look because I haven't seen anything. Guess that's quite a rally we got going. What do we got here? Oh, lovely. We're still in a mean reversion. And right above us here at 78.5 is a low volume zone. If we get above 78.5, we can rip up to 86. Just saying. What else we got here? Oh, wow. VWAP. Huh? The lowest. Okay, this is a short. Not a trade recommendation, guys. And here's how this would work. I see my sellers on the other side here. I see my sellers, same guys here, come back in. I see exhaustion, micro high volume here. So this is a short and you're going for this. Not a trade recommendation. Pretty timely, don't you think? Does this make sense? Can you see why I would be looking at a short right there? And this is, guys, I haven't even had a chance really to look at this. I just am reading the structure. Does Bookmap show price target above 5,400? Well, Bookmap, well, I don't know what you mean by Bookmap showing a target. Bookmap is an order flow tool. I have levels up here that are here, and I have this area here, which is a low volume area. If I come out in here, I can rip up to here because this was the ETH where it was the retail price. So everything below us, I should say everything below here, this is too high. Now, are we going to come back here? I have no clue. I just follow the yellow brick road. I find for me, in the time frames I trade, I just trade this. Like this is a short for me. I'm not saying anybody should do this because if you're looking for somehow to avoid the pain of loss, I mean the collective you, that's not trading. Casinos pay the gamblers. I mean, if they couldn't handle the gamblers walking out with cash, they would close the casinos. But the gamblers get paid. It's overhead and cost of production. I take stops. It's overhead and cost of production. I take a stop. I put it, and if nothing has changed other than my location because of the randomness of rotations, I just put the trade back on again as long as the structure's intact. I know if I get in here that we're going to rip up to here, maybe, but right here is a short to here. And then maybe, and I got to look some more at the structure here. If I get under here, I might come here. Here's what happened here. We came outside. This is an outside edge of a larger consolidation. If I don't, once I come up in here, and if I don't get up in here, then if you think of this like a higher time frame consolidation, this is an outside edge. Now, the problem with outside edges is where's the outside edge? That's part of the joy. And if this holds, which no clue, not my job, then this is what's next. It's called mean reversion. If I put my short on here and I get risk neutral and then it comes out here, I'm going to scratch the trade and then I'm just going to squeeze into this. That's as deep as this gets. It's not what will happen, it's what might happen. So we're going to watch this. This would be my short. If I was sitting here, we're all hanging out, laughing and crying together, and it's a bit of both emotionally, that's a short for me. But here's the key, risk neutral. So in the Trader Lab, I always talk about a minimum 2-lot configuration. And what that's all about is the distance from your entry to failure is the range you need to get risk neutral. Your stop would stay, and this is for developing traders because you want to build out statistics, where the trade fails, which would be up in here. Because I get over there, we're going to rip. And that's not long for me. It's I'll see you later. I'm folding the 10th and I'm out of here. So, and if I don't get here, I don't get here. It doesn't matter. At least that's the way you have to experience this. Because if it matters, then you're not playing the game, if you will, like a casino. The casinos are not attached to the outcome of the next hand. They understand the cards coming out of deck are random and how gamblers play the cards is random. They also know if they play the games exactly the same way over time, they extract dollars from the gamblers. That's our business. So whatever happens on any one trade is not really material. As long as you follow your plan, get risk neutral. And we often don't get risk neutral and we take a stop. So I'm going to say, if you can't handle it, then trading isn't your business. We take risk, and we take risk because if we have an edge, we develop the confidence. Notice where we came. We develop the confidence to put a trade on and to accept the random outcome. That's what we do. That's as deep as this is. Whoop, that moved on me. I didn't want it there. It was actually there. Let me put this in the right place. So this is your high volume. It jumped on me. So this is not it. Okay, it's this. So right here, now for me, I put the trade on here. I'm just saying that's only because I've got some practice and I can respond. I know what this says. I know I had a seller there. I got a buyer here. Who knows? I see nothing here. I come back. Where's my buyer? My seller was there. My buyer is here. and I have a trigger. I have a test here. I break. I have a test here. All these are shorts in the Trader Lab. Stop is here. This pulls back here. Where does it come? Back here. What happens here? I got another short, not a recommendation. You see what I'm saying? This is what's called structured trades. This is available to all of you in the Bookmap Discord Trader Lab chat, and there's no cost. There's a link in the bottom of YouTube, and if you find this, interesting, you're all invited. And now here's the thing with the trade. My job as a trader is to manage my risk. So my goal is to get risk neutral. Then I can anticipate a couple of things. I can get here and find retail buyers and get a bounce. So next target is ahead of this. And then it either gets there or it doesn't. That's as deep as this is because it's random. But because I've been doing this and you've been doing this, we understand the VWAP. We know there's traders who mechanically buy the VWAP, and it's not about them being right or wrong. It's about behavior. If I get short here, number one, I got to get risk neutral. The other part is I know if I get here that I can anticipate maybe a bounce. If I get under it, I'll get into stops. And where am I trying to go? Here. And will it get there? No clue. Why would I do that? Let me give you the concept. Now, everything's random. So don't take anything that you ever hear from anybody in this business as prediction. Everybody, psychologically, you would pay anything, and I would too, at least back early on, to be able to predict anything. Because that's what that is saying. The word prediction is not what it really says. It is really yanking on your emotional need to avoid loss. Your need and certainty is about predictability, which is about not being random, but being certain. That you want that. We're wired for that. We are wired to avoid the saber-toothed tiger. Well, in trading, we've got to grab that saber-toothed tiger and deal with our fear. So the way you deal with it is knowing, based on doing a lot of work, which is what you can do. And if you're not interested in work, then Trader Lab's not for you, because Trader Lab's about building careers. It's not about the latest fad or indicator that is the secret sauce. I'm going to suggest if you've been looking for the Holy Grail, you're still looking for it. So maybe your time might be better spent not looking for the Holy Grail, but looking for how you can understand market mechanics and get in alignment. The way you can get to manage your emotional states is to have tangibility. In a random environment, what creates tangibility? Statistics. You can touch a statistic. You can't hide your emotional state, because without a statistic, you'll be bailing out, you'll be moving your stops, you'll be doing everything. And all those things are not what professional traders do. That's what retail traders do, who are managed by their emotions. And our emotions are extremely, extremely strong. You'll never be able to stop how you feel. You can develop a plan that allows you to better manage your fear. Every time I put a trade on, I'm fearful. What am I fearful of? I don't like to lose. Is this the right time? Is this the right place? What I've figured out is I can't tell the difference. I just put the trades on because I'm leaning on statistics. That's why this short is to get risk neutral. Now it's either going to work or I'm going to get taken out. That's as deep as it is. It's, for me, the success is following the plan, not the outcome of the trade. So this is still right here. Too high, sellers are here and here. So your stop would be here, but you'd have no risk if you follow the plan. If you put it on here, you would also be risk neutral, and you'd have a few burgers locked in. This is a successful trade no matter what happens. And if it takes this out, remember, what do I know? I've got this low volume area, and we can just rip up into this. That's what I know. And I know I don't know after that, okay? Hope you're getting something out of this. Give a thumb up in YouTube. And remember, there's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab community. There's 60 PDFs of these structured trades you can download, reverse engineer, plus a library of webinars where you can see this process over many different market configurations, some up to almost 5 hours long of real-time narration in high volatility environments and transitional environments. You know, the thing is, let's assume the context might be down. And how do you trade a down context if you think it's down? Now, if we get through here, we're going to go higher. That's no problem. You trade outside in. It's called mean reversion. That's the mean. If this trade fails and I come up here, I'm still not done with the shorts. I might be. I have to, you know, I cannot see all the pieces here because I'm looking at a shorter time frame. Okay, this is a variable high volume node. I'm going to mark it. You've seen me do this. What is it? This was a retail price that was too high. If I come back here, I'm going to be observing it. And what that'll set up a couple possibilities. Now remember, I'm coming up into this thing. So I have this and I have this. So when I come up in here, I'm going to be looking in these areas. This is the last location that was too high. I'm going to throw a line in here just so we don't forget where it is. There. So really this, and there's high volume here, and there's high volume here. This is the low volume zone. So the market can easily come into this somewhere. And what's tricky is we don't know how far out or if we'll go through it. So that's the unknown. But nothing has changed yet. It's still potentially outside in or mean reversion trading. So, and that's not a recommendation. We are now in my least favorite trading condition. And it's trying to pick the outside for coming back here and there. So we'll have to see. So let's hang out together and watch the yellow brick road. These are hard trades now because you might only be getting short on a little rotation and then gets squeezed out. So this is, again, hard. And you'll see what you see here. Watch, this is a trigger, and you can get a little bobble and then get squeezed. But here's what you need to know. This is the outside out here. I'm going to mark it. It's an outside edge of the consolidation. And I always want to stress, mean reversion in TraderLab, we say, yeah, it's mean. Because you can get a trigger like this, and it only gives you a little bobble and then squeezes further because you're going to have sellers. So that's why I'm telling you, it's just not my favorite thing. I tend to take more stops in this because I'll see a trigger, but all it is a shallow counter rotation. But the other part of it is I'm okay taking stops other than how I feel, emotions about it. But I know this. If I get my trade, wherever it is, I'm going here, there. So that's why I'm willing to take stops, because I got to pay to play. This is a potential short right here. So you got to be really aggressive with these. And I also, if I put one of these on and I see the wrong thing, I'm very quick to push the eject button because I'm in an area. So this is not a trade recommendation. This is where I take a lot of stops relative to other trades. You see. So this is a short I would take, and I'm trying to get risk neutral. I know this volume here, right here, is support. If I put a short on here, I got to get, you see this high volume there? I got to get risk neutral before there. And if it doesn't get there, I'm going to take a stop if I don't get risk neutral. So my objective with a short is and all I'm trying to do, because I consider these really dangerous or lower probability structures for me, is to get risk neutral. So now mid, what do we think we might get at mid? Buyers. See. Now I can't scale at the mid, it's too close. So I have to try to go down to this. If I don't, and you'll see how hard this is. If I don't get my scale and I'm watching, and I've got my levels here, and so I'm watching this. You see the seller? This is a short, as you can see, right? And this is TraderLab. You know what else is TraderLab? You take stops, you get risk neutral. Where's my support? Here. Where am I going to scale? Ahead of that volume. Let's watch now. If I get below here, then I'm going here and the VPOC. That's the trade. It's called mean reversion, stressing the term mean. This right here is my support in the micro fractal or structure. And you see where it's coming from? It's coming from this. Right there. Is this making sense, guys? Can you see how this might work? It's called mean reversion. How are we doing in YouTube? And by the way, if you're in YouTube, hope you're getting something out of this. Please give a thumb up. This stream, I believe, if you guys like it, I will make it available over the weekend. It's exclusively for Bookmap Discord Trader Lab community members. Remember, there's no cost to be part of Trader Lab community. It is the community of like-minded traders, and we've come together really to leverage our collective experience. Everybody brings their toolkit. You know, okay, bring your toolbox over. Remember where the scale is. It's against this volume. Why, you ask? If you understood what it means, remember, language, would you do something with this? Would you be able to sell there and scale there and now have your stop here and be okay with it? And understand, we might get a reaction here to here, or if we cut through this, this is the trade. It's mean reversion. Subject to the number of contracts, this would be the trade and trade management, and you'd be done with it. To me, 55, you know, from call it 75, a 20-point trade. Does that work for you? And it's not a recommendation, but this is, would you risk entry? Now, the entry could be here or here, wherever, you know, call it, let's be generous, call it 77. Your risk is to 81, 4 points, or, yeah, 70, yeah, call it 70, whatever, 77, and your risk would be here. 3 points. That's about what I take for risk on the outside, usually. I can take a little bit more, you know, but, and there's your scale. Now, your stop is here, and you'll still get something out of it. All you need is the distance from entry to stop for your scale, which you would have. And it has to be whatever that range is before this or at this. It's all up to your plan. And now you're just sitting here working on your crochet, and this is your target. That's a 20-point trade on a 2-lot plus the scale, if it works. If not, you still get something. I hope you're finding this useful. If you're in YouTube, please give a thumb up at the bottom of the chat. Also post your questions. I'm going to take a look at questions if you have them. This is structured trading. This is what we do in Trader Lab. And there's no one way to trade. I'd love to tell you there's a right way to trade. I haven't figured out the right way to trade. What I've figured out is what gives me an edge. And over time, if I can have the discipline not to be overtaken by my emotions, and I just follow my plan and minimize the errors, which occasionally happen, and just do my thing, since I've done the work and know that I have an edge, just like the casinos, I just deal the cards. I don't prejudge the outcome of something that hasn't happened. I'm not living in the future. I'm living in the present. I'm trading the now. I'm not trading what happened on the last trade. I take a stop on the last trade. Am I thinking of the past when I'm going to put on the present trade, or am I just here now? I have a mantra called be here now, because if I take a stop on the last trade and I now have a trade here and I'm going, oh, and I'm living in the past, I'm now maybe going to skip this trade because I'm not here, I'm back there. Or I put the trade on and I tightly manage it because I'm thinking of what happened in the past and I'm projecting the past into the future, which hasn't happened either, instead of being here now. Does that make sense? That's the psychology. So we're going for this. This is the same trade from over there. Remember? C'est la guerre. How do you feel about it? I don't like it. What do I do about it? Take the next trade. Go in here. Not a recommendation. Now, what else do I do? Now, this is subject to trade management. What is to? There's my sellers. This is the last place my buyers had any gas in the tank. I get buyers here. I get sellers here. Now, watch. Mid is up here. This is an outside edge of this consolidation right here. You can trail up here. You can trail from here. You could do whatever you want to do. Remember, and I know I have some support sitting here from somewhere. Let me go take a look where it came from. I got to be conscious of all these things. Yes, there were buyers here. So another area to observe is this, but this is my target. To take the stops out under this swing to get here. Remember, the market goes up to go down. The market goes down to go up. And this is why I was taking a short up here. That one didn't work, okay? Same trade, just from a different location. This is called mean reversion. Now, remember what I said. If I got taken out, we could come up into here. That was my concern. This was the outside edge. Up there, LVN. How close did we get to it? That's why there's no precision in trading. It's like stepping on a rake sometimes. But this is a trigger. There it is. There's the short. So this is all narrated in advance, right? And this is not about I told you so. This is about, yeah, I take stops, and yeah, there's trades, and this is the business. If you're allergic to taking losses, you can't get the win. You can't get the gains if you're not willing to pay, you see, to play. You got to see this like a business. And the business is really, there's no business that doesn't have overhead and cost of production. It's just the way it is. All I'm doing is, this is all I'm doing. This one, not so much, right? Same thing, little different location, same trade. Now we're going here. You see the logic behind this, everybody? Give me a thumb up in the bottom of YouTube. Remember, this is an area to observe. Get under here, we're going to get stops, and that's the next target. So we're putting together about a 20-point trade here. And you'd be doing that on a 2-lot in the Trader Lab. Does that work? By the way, if you're interested in the Trader Lab and the work that's done there, it's a no-cost community. You can download 60 PDFs that I've shared of these structured trades for you to reverse engineer. There's nothing mechanical in the sense of red light, green light, which is what we all strive for in trading. It's like, oh, please, give me something simple that tells me buy, sell. I know. Or the one magic indicator. If you've been around this business for more than 20 minutes, it's a bunch of nonsense. Well, that's just say it's a biased opinion. Okay. And it's only because been there, done that, have been on the search forever. And I've been going on 45 years and professionally, and now sitting out here with you guys. And that doesn't mean I have a monopoly on anything. It just means I've done the same things you have. And I have probably a lot more experience than you. So I understand things because I've seen them and experienced them before. It took me a long time to understand emotional stimulus. And why I had a problem controlling my emotions. It was because early on, I thought trading was a prediction business, not a statistical business. And we all think we have statistics by P&L. That's not what we're talking about here. We're talking about specific trades that show up and what the conditions are that they are aligned with. So this is the next target. That's a 20-point trade. And this trade isn't done. This is just the first part of it. If we get under here, this is the next target, not a recommendation. So depending on how you trade, you could be scaled, done here, or scaled, trade management, and then to here. Or you're running a 3-lot and you're off. Now you got the scale, you got this and you're going for this, and maybe take out the low of the day. Doesn't matter. That's Trader Lab structured trading. If you're in YouTube, I invite you to Trader Lab. See the behavior. So this is Trader Lab trading. This is auction market theory using structured trades and using Bookmap OrderFlow tools for the timing and the reading of the nuance for execution. So it's putting all these pieces together. And since I don't use indicators, I'm really relying on the tools to get me as close as I can to the behavior for timely execution and risk management. I understand what this is from the auction. It's the retail price. And the idea of coming outside in is a specific context called mean reversion. If you're in a downtrend, and let's say maybe we can agree we're in a downtrend, maybe not, but I'm gonna step out on a limb, as they say, and say, yeah, we're in a downtrend. Then I'm only going to be taking shorts. Remember, that's my plan. There are other traders who will take a long and take a short. I don't. It's just too much trouble for me. I want to be with the strong hands. So when you get think of it like armies. There's counterattacks, which are squeezes. And it doesn't mean that we haven't found the low of the day. Nobody knows where that is until hindsight. I certainly never know. So I just keep taking the trades that are in alignment. So the trade here, mean reversion is an outside-in trade process. In the Trader Lab, you would have a different trade plan. You would know the context is down. You would also know why you'd be taking shorts here to come here, and then the same trade is just from a different location to come here. This is the same trade. How would I know that? Let me clarify. I don't know if the trade will work. I have no clue if I'm going to take a stop here or here. No way to know. I also mentioned to you that mean reversion is very difficult because you'll get false, where's the outside edge? So I take more stops in mean reversion. I don't know anybody else who streams is going to tell you that because they want to look good. I think it's better that you just know, this is just what the business is, Oh, and do I have losing days? Yeah. Wow. Yeah, I do. Because I have a loss limit. If I get out of alignment, or the other part is my plan and the current condition of the market are not aligned, then I go, what's going on? Because it's not, my edge is not being distributed at that time. That's all it tells me. And then if for whatever reason, I get to a certain drawdown, I just stop for the day and I go, I think about it and I try to think, what could I do better? What do I learn? Because if I don't have a good day, how much of it, if I follow my plan and hit a loss limit, it does happen. How do I quote respond to that? How about this? Good job. Because that's what keeps me in the business. Following plan, risk management, and discipline. Now remember what we're trying to do. This was a target. If I get below here, I go here. You could be done with the trade. It's a 20-point trade right here. Now, I'm not trying to make a big deal out of it because I do this all day long in the Trader Lab. I post as best I can. Maybe in the future I'll do audio in Trader Lab in real time, but this is not my business. My business is doing this. It's the same as yours. I'm a full-time trader when I'm not streaming. I can't trade and stream it. That's like saying walk and chew gum. I don't multitask. Thumb up in YouTube. If you're interested in Trader Lab, there's a link in the bottom of YouTube. There's no cost. Visit the Trader Lab community. There's 60 PDFs of these trades. These are structured trades. I did these a long time ago. I'm not a vendor. You can look at these, isolate them, come to the Trader Lab community, ask there what other traders have done, how they have progressed in their development of a career, and what they would recommend to you as far as where to start. And this is a business. If you want to be in a business, roll your sleeves up. You're in a very competitive environment. If you want to create longevity, there is no plug and play. You've got to differentiate what you do from other retail traders who do not have good statistical outcomes. Please give the thumb up. And remember, if you're in Trader Lab, this stream is available exclusively to you. to look at over this weekend, screenshot, reverse engineer, compare to your trades, see how you can always improve. That's what I do. That's what the Trader Lab is all about. Leveraging our collective experience so we can all get better. Thanks again, guys. Appreciate your support. Please give a thumb up on the way out at the bottom there in YouTube. There's a link. Subscribe to the stream, I should say. Visit the Trader Lab. There's no cost. And come over to the Bookmap Discord Trader Lab chat. Also, there's a lot of additional education at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, options, and a lot more. It's all available at no cost. See you there. And say hi when you drop in the Trader Lab like the